Hello there, Maverick traders. This is Rob again. Boy, you must be getting sick of me this week. We've got a lot of people out on vacation, so I am here. Let's go through the day. Okay, so let's go over what we're going to cover here. We're going to cover, as we always do, what happened today, what was the news of the day, what was the market's movement, and we'll take a look at commodities. And then, of course, we want to see if anything changed on our score update. We did have a big movement today. We're going to see if it actually changed our scoring system. And of course, we're always looking for setups, always looking for trades, so we'll dive into a couple decent trades.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
Let's take a look at the broad market analysis first. We got a pretty major intraday reversal today. So let's start off with the news. We had good earnings last night. We had Meta. They beat earnings. Meta was up really big in the morning. We had Lam Research, semiconductor company. They blew numbers out of the water. They were up big. The market opened up really big today and then gave it all back. Not just gave it all back, but even more. At one point, the NASDAQ was up about 1.7, 1.8%. It closed negative for the day. Why did it happen? Look, there's definitely going to be some profit taking in this market as we've gone so far, but the 10-year bond yield went above 4%. And I said last week, I said, look, if the bond yield gets over 4%, that is trouble for technology. So let's take a look at the numbers. Dow was down, S&P down about 2/3%. The Qs down 0.5%. We still had stocks like Meta and Google and Nvidia holding that up, but we had big intraday reversals on a lot of them. The Russell 2000 never got going. It never rallied and just fell out throughout the day. And oil was up, but gold got hit as well. It started as an up day, but we fell apart all day long. And if we take a look at the market internals, check that out, 76%. So 3 out of 4 stocks ended down for the day. It could have been a big breakout. Let's take a look at the charts because this is a big old fat red nasty candle. So we got the gap up. Then you can see there was hardly any buying and we sold off all day long and there really wasn't any buying coming in at the close. This is a bearish engulfing candle. This happens at the end of waves. Okay. But what does it mean? Let's take a look at where we are because this potentially was going to be a breakout. It failed. What does that mean? A failed breakout on a base just means it's still strong, but it's not ready to go yet. When we take a look at this chart, we are still quite a bit away from our first test of a 20-period moving average. We're going to stay at +3 until it goes below this 20-period moving average. Now, yes, this candle's nasty. Yes, I think there's going to be some follow-through because of it. But look, that's my opinion. I don't know what's going to happen tomorrow. I have no idea what's going to happen next week. So I just have to trade with the technicals. And the technicals are still saying, okay, it didn't break out. Boo-hoo. There's nothing dangerous in the stock chart to say that we should be worried that this is going to be something more than a pullback. So the S&P still looks really good. However, here we are, a little bit different story here on the NASDAQ. Now, if you watched my midweek update I did yesterday, I talked about how this candle yesterday was going to tell us everything. And by the end of the day, it told us nothing. So I did it before the Fed meeting, and I was expecting there to be a big up candle or a big down candle after the Fed meeting, and we got nothing. That candle we got yesterday told us nothing. It said the bounce that we thought was going to come, this pullback, says it wasn't any sort of confirmation. This candle is an ugly red candle. It gapped up, it sold off, but again, take a look at where we are technically. We haven't broken any support. We haven't broken any moving averages. Look, do I think they're going to break? Yeah, I do. I do. Guess what? I've been wrong a ton of times as a trader. And so I no longer trade my opinion. I now only trade the charts. And until this 20-period moving average is broken, I am going to stay at a +2 here on tech. I'm still at +3 on the spiders and S&P stocks, but on tech, I think you've got to back it off. You've got to back it off. We're sitting right at that 20-day moving average. A red candle tomorrow below that, that's going to take the Qs down to only a +1, which is mildly bullish. So I talked yesterday in the midweek update about how I am pulling back. I was pulling back on Wednesday from my bullish outlook to a more neutral stance. And then after the Fed meeting, if I needed to, I would get back on the bullish side. But at this point, I'm right where I want to be. I said my portfolio is at a +1, mildly bullish. That's exactly where I still want to be. The market is not telling me to be anywhere different. If we take a look at the heat map, we can see that there were still some strength here. Meta, Google, Nvidia, Micron, they all were very nice here. But the big things that reversed, Microsoft had a big reversal, Tesla had a big reversal, financials had a big reversal. Look, this is definitely a red bearish engulfing candle day. These typically do have more follow through behind it. But remember, where are we in the charts? Where are we in the charts? Look where we are. We're still in a high base. We haven't really broken anything yet. We still are well above this last support line. We're well above the 20-day moving average. So look, you got to stay to +3. I know you probably don't want to, but you have to. Now look, this is just your outlook for the month. This isn't what's going to happen over the next 2 days. I think what's going to happen over the next 2 days is we probably get a little bit of follow through selling on this. But I'm looking at a month. Where's the market going to be? I think it's going to be higher. So take all of this into consideration. These waves, they move up and down. We had a big wave over the last 3 weeks. We're just going to get a little receding to some price points before the next wave comes in. That's what bull markets do. They have pullbacks and they have bases. And then they have breakouts. And then at some point, they end. Is there anything in this chart telling us it's over? Nothing. Not one thing. So we will be updating that, of course, as these markets change. But at this point, it's still telling you to be bullish. That's where this market is. But there's no question there is a pullback likely coming over the next couple days. Let's go ahead and take a look at some potential trades. And I pulled most of these off of yesterday's midweek update. Here's a great looking chart. If you didn't have a chance to see this chart on Wednesday, go ahead and pull up this chart in Boeing. Actually, I'll throw on a longer dated chart here so you can see what has happened. It has broken out after a 7-month high base. Yes, it gave us a red candle today, but it was up for the day. This stock stayed up for the day. This is a great breakout. I love this trade. So the trader that gave us this trade yesterday, thank you. I still think this trade looks really good here on the long side. Coming over here to UNH. This was another trade, and we met on Wednesday, and you can see on Wednesday we did reverse on this. So there was really no clear entry point on Wednesday, and then we had a down day today. So here is a question. Is this high base over? We don't know. We have no idea. So UNH is a very strong stock. It did go down today, but it's staying in its base, 503. I am not ready to buy this one tomorrow or take any sort of position in it, but I will be watching. If we hit 503, give us like a doji or something, and then next week we get an up candle, I really like to enter positions on the bottom of bases. And what I like to do is I like to do diagonal call spreads and sell a short-term top. So again, this is 515. I don't know if this has $5 strikes, but I would look at doing something like a 505, going longer out because it's a diagonal spread, and then selling that Friday's 515 if they got a 515. If not, I might have to do something like a 500, 510 and sell the 510. I really like these kind of trades because it's likely to stay in this base for a little bit. I get paid while it's in the base, and then if it breaks out when I'm not hedged, I don't have this 515 anymore, and it breaks out and runs, I just got long calls. This is a really nice trade setup. So I still like this one, but I do need to see a bounce off this 503. Let's go with the sideways trade. We talked about the Starbucks, and we talked about how it was starting to look like it wanted to break out of this range. It's been in this trading range, 96 to 102. and it was percolating. And I said, you know what? I don't think it's going to have the gas. It's underperforming. And sure enough, we can see we gave up all the gains yesterday and we went in for more. At this point, this was not a breakout to a new trend. We're back in the sideways trend. So we love to pull out our butterflies here. I think you can take a look at like a 95, 100, 105. This is going to have dollar strikes, so you can do anything. You could do a 99. You can say, hey, I want to do a 99, 103, 96. Again, wherever you want to put this, but we think this Starbucks is likely going to just come right back down into the middle of this range that it's been trading in. And on the short side, I always like to choose new trades and new symbols, but this one is just been popping up over and over and over again on my scanner. So look, I talked about this one on Tuesday. I'm going to talk about it again. This stock is completely underperforming. Now look, it's not going down. Nothing is really going down hard right now, but this one's just weak. And you can see a nice bearish engulfing candle. We are literally at support. It is holding on for dear life. It can't rally on the times when the market is up. It fell this whole time the market's rallying. I think this thing's got a lot of pressure to the downside. I like a 14-15 bear call spread. Pretty easy trade on that one. So let's talk about tomorrow. We have one more day left of this week. I think there's likely going to be a little bit of follow through. Now look, if there is a gap down in the morning, if there's a gap down, I actually can see people coming in and buying that gap down and having an actual green candle tomorrow, even though it might still be a negative day. But if this market opens up where it is or gaps up a little bit, I think more selling comes into this market. But there's no doubt in my mind that there's still money on the sidelines looking to get into this market. So any big move down, I think, is bought. A gap down is likely bought. But we are at elevated levels. There's no reason why we can't pull back to a 20-day moving average or even a 50-day moving average if it's a deeper pullback. So I do think you want to be a little bit cautious here entering new trades on the bullish side. Just wait. Wait till sometime in the middle of next week when you have a little bit more clarity of how deep this pullback is going to be. I think you just want to kind of ride out, manage your trades for this week. And then next week, I think you want to start looking at new trades. There is no FOMC meeting tomorrow. So again, go check the economic reports and check the earnings reports as well. Thanks for joining me. Everyone have a great rest of your week. Goodbye.